The stock market is currently closed, and as of the final bell on July 16, 2026, ONDS Holdings Inc., trading under the ticker symbol ONDS on the NASDAQ exchange, finished the regular trading session at exactly $6.65 per share. This marked a noticeable downward drop of 5.67%, shedding 40 cents from its previous close of $7.05. The daily trading range fluctuated between an intraday low of $6.55 and a high of $6.91. The immediate instinct for many retail participants looking at this sharp daily drop might be to assume a cooling of demand or a sudden operational roadblock. Yet the reality underneath the surface is that massive institutional block trading and liquidity adjustments are occurring following one of the most aggressive acquisitions seen in the small-cap autonomy space this year. While the retail crowd panics over a single-day 5% slide, larger funds are rebalancing their positions to account for an almost absolute overhaul of the corporate footprint. The broad market expectation surrounding ONDS is that it is a high-growth defense technology proxy, riding the tailwinds of autonomous systems, counter-drone technologies, and critical infrastructure intelligence. If you glance at conversations across major investing sites or popular retail communities, the dominant view is that this asset is an uninhibited rocket ship fueled by escalating defense contracts in Europe and the United States. However, the contrarian reality is far more complex and demands a closer look. When a company pulls off an $875.8 million purchase like their recent buyout of DYZNE Technologies, the financial mechanics inevitably trigger massive near-term friction. The market is currently wrestling with the tension between spectacular long-term top-line forecasts and the immediate structural dilution and integration risk that comes with absorbing a business of that scale. Looking closely at the trading tape from the July 16th session, the sheer scale of the volume tells the true story. We saw over 109 million shares change hands in a single day, a massive surge compared to historical baselines. This sort of heavy volume indicates an intense battlefield between short sellers betting on near-term balance sheet stress and institutional accumulation by funds adjusting their long-term growth portfolios. Institutional activity has become incredibly volatile here. Large-scale wealth management divisions and firms utilizing an advanced interactive brokers trading platform are actively recalculating their risk parameters. When a stock falls from the $9 range witnessed back in mid-June to the current mid-$6 level, it creates a severe technical breakdown on the charts. Sector momentum within the broader aerospace and defense technology space has been mixed, but ONDS is experiencing its own unique volatility. The reaction to their raised full-year guidance has been a classic case of buying the rumor and selling the news. Even though the company drastically raised its 2026 revenue guidance to at least $525 million following the DYZNE transaction, the equities market chose to focus on the cash and stock mix required to finalize the deal, prompting a wave of algorithmic profit-taking. When investors look for investment help to navigate these wild swings, they often compare the behavior of small-cap growth names to mega-caps. If you look at how retail investors manage their portfolios on a Robinhood mobile app, they might be used to the relatively steady trends of something like Tesla stock, Apple stock, or Nvidia stock. Those companies operate with massive liquidity and highly predictable institutional backing. When an investor makes an online investment in a small-cap option like ONDS, they are entering an entirely different arena of market mechanics. The daily swings are driven less by macroeconomic policy and more by individual contract announcements and capital raises. For instance, an individual brokerage account holder using Fidelity Investments might see a 5% drop in a blue-chip stock as an absolute emergency, whereas in the world of autonomous defense equities, a 5% swing is just a regular Tuesday. To truly understand why the current reality is testing investor patience, we have to look at what this company actually does and how its business model has shifted. At its core, ONDS operates through distinct segments tailored to high-end industrial and defense applications. They built their foundation on proprietary wireless data networks designed for mission-critical applications, particularly for the railroad industry and critical infrastructure. They expanded heavily into automated drone systems, creating end-to-end solutions where drones can launch, execute data collection or security missions, and land back in automated base stations without requiring human operators on site. Their systems handle everything from tracking asset health along thousands of miles of railroad tracks to providing aerial security over sensitive facilities. Older reports and past performance figures highlight how rapidly this business model has scaled. Just a few quarters ago, in the first quarter of 2026, the company reported record financial results, with revenue hitting $50.1 million, which was an astonishing tenfold increase year over year. That performance was driven by their strategic growth program and a surging global demand for unmanned systems. At that time, their product companies actually became adjusted EBITDA positive, which happened 6 months ahead of management's original targets. Their backlog was sitting comfortably at $457 million, giving them clear visibility. This historic data shows that the operational engine is highly functional, which stands in stark contrast to the recent downward pressure on the stock price. For the average individual building a self-investing strategy through a Schwab Intelligent Portfolios setup or an intelligent portfolio on another platform, small-cap names like this rarely show up in automated allocations. Automated systems usually favor broad market index funds, Fidelity ETFs, or Fidelity mutual funds to manage downside risk. When you choose to invest online through active management, you have to accept that the gap between a company's operational success and its stock price can remain wide for months. ONDS has been securing major wins, including an integration of its Centric cyber technology into Lockheed Martin's counter-drone platform, and over $40 million in new orders for autonomous defense systems in June alone. Yet the equity continues to slide because the market is hyper-focused on how these acquisitions will affect the near-term cash runway. This brings us to the future outlook and the critical catalysts that could completely flip the current market narrative. The expectation is that the massive DYZNE Technologies acquisition will establish a dominant autonomous defense platform spanning persistent intelligence, aerial security, and autonomous effects. The reality will depend entirely on how smoothly management can achieve the $525 million revenue run rate without returning to the public markets for additional highly dilutive equity raises. If they can hit their milestones while maintaining positive adjusted EBITDA across their core business units, the current valuation in the mid-$6 range could look like a massive disconnect in hindsight. Conversely, if integration stalls, or if defense procurement cycles in Europe and the US experience bureaucratic delays, the cash burn could force their hand, putting a hard ceiling on the stock's near-term upside. As an investor looking at the landscape of online investing, you have to weigh these specific operational risks against the broader macroeconomic environment. High interest rates have traditionally penalized small-cap growth companies that require capital to scale. If the central bank begins to aggressively cut rates later this year, it could spark a massive sector-wide rotation out of mega-cap technology names and into beaten-down small caps with verified backlogs. Investors using advanced tools, whether checking Interactive Brokers' fees for short positioning or scanning the Robinhood app for retail momentum, need to keep an incredibly close eye on the upcoming quarterly earnings report. That release will provide the first clear financial picture of the combined entities and show whether the revenue guidance upgrade is translating into actual net income. Comment below how many shares of ONDS Inc. you currently hold in your portfolio, or if you are entirely avoiding the small-cap defense sector right now. When we summarize the central insights of this analysis, the contrast between expectation and reality becomes the defining feature of the investment thesis. The market expectation is focused on the recent 5% daily drop and the multi-month slide from the summer highs, causing retail panic on popular investing sites. The structural reality reveals an operational powerhouse that has grown its revenue tenfold year over year, holds a surging backlog, and has strategically positioned itself at the center of global defense procurement through massive acquisitions. Whether you manage your capital through a traditional Fidelity brokerage account, trade actively via Interactive Brokers stock trading, or utilize a basic individual brokerage setup for long-term holding, ONDS represents a high-stakes bet on the future of autonomous systems. Navigating this